Okay, so today we're taking a deep dive into Dabur India Limited.
Right?
It's a pretty big player in the FMCG space.
Yeah.
And you sent us some really interesting info about how the stock's been doing recently and some takes from analysts about what might be going on.
Absolutely.
So what we want to do today is really try to understand what's driving the current situation.
Right.
Without getting lost in like every single detail,
For sure.
just trying to extract, the nuggets.
The key takeaways.
Yeah, exactly. So you can get a real grasp on this.
Yeah.
So we're going to be looking at a few different things here.
Okay.
We've got some recent trading data, of course, their earnings report for the quarter ending last December. And we'll even touch on some of the technical analysis surrounding the stock.
Sounds good.
So yeah, think of this as your quick route to understanding where Dabur stands today,
Right.
what kind of opportunities might be out there for them, and what are the really crucial factors to keep an eye on moving forward.
For sure.
Okay, so let's jump right in. The first thing that kind of pops out from the stuff you sent is their current market position.
Yeah, it's an interesting picture right now.
Yeah, as of March 16th, 2025, Dabur was trading at 500.95. Now, that in itself might not mean much, but here's the thing.
Yeah.
That's actually a pretty substantial drop from his 52-week high of 672.
Oh, wow. Okay.
Yeah, so we're talking over 25% down.
That's significant.
It is. And, when you see a decline like that, it often signals that there's,
Concern.
some concern, some negative sentiment around the stock.
Make you wonder what's driving that, right?
Exactly. So let's dig into that a little bit.
Okay.
Let's look at their recent financial performance. We've
Okay.
got their earnings report for the quarter ending December 2024. And at first glance, the top line numbers seem decent.
Oh, really?
Yeah, net sales came in at 3,355 crore,
Okay.
which is actually a 3.07% increase from the same quarter the year before.
So they're selling more.
Exactly. And net profit also inched up a bit, rising 1.97% year on year to 10 crore.
Okay, so both revenue and profit are up.
Right, but here's where it gets a little more nuanced.
Oh, okay.
Thing is, while their revenue grew by that, over 3%, their profit only went up by less than 2%.
That's interesting.
Yeah, and that kind of discrepancy can raise some eyebrows,
For sure.
because it suggests that maybe their fundamental profitability is under some pressure.
Right, like it's costing them more to make the stuff they're selling.
Yeah, or maybe they're not able to raise prices as much as they need to.
That could be it too.
So, it's something analysts are going to be looking at really closely.
Makes sense.
So we've got this interesting dynamic. Revenue's going up, but profit's lagging a bit.
Yeah.
And that brings us to the technical analysis.
Right, because that can give us some insight into how the market's interpreting all of this.
Exactly. And the first thing that jumps out is that downtrend from the 52-week high, which kind of reinforces that cautious sentiment we were talking about.
Yeah, it's like the market's saying, hold on, there might be something else going on here.
Exactly. But here's something else that's really interesting.
What's that?
The current price is actually near what they call multi-year support levels.
Okay.
You could think of those as like a psychological floor for the stock.
Yeah, I see.
Historically, when the price gets down to these levels, enough buyers step in
Okay.
because they see value, and that prevents the stock from dropping further.
So it's like a safety net.
In a way, yeah. But if the price breaks below those levels,
Oh.
that could be a sign that, sentiment has really shifted.
That's a good point.
So those support levels are definitely something to watch.
Absolutely. What are those levels specifically?
So there's the 480 to 490 range.
Okay.
That's considered strong historical support.
Right.
And then there's a major support level down at 450.
Got it.
Like if it breaks below that, that's significant.
I see.
Now on the flip side, we've also got resistance levels.
Right. The points where it's historically had trouble moving higher. Yeah.
Exactly. So there's immediate resistance at 525 to 530.
Okay.
And then a stronger resistance zone up at 575 to 600.
So it's like it's got these barriers above it and below it?
Yeah. Kind of like a channel it's trading in.
Interesting.
And then there are these technical patterns that are emerging too.
Like what?
Well, there's a potential double bottom formation.
Oh, I've heard of those.
Yeah, so that's where the price tests that key support region a couple of times. And it can be a sign that a reversal might be on the way.
Like it's bouncing off that support level?
Exactly. And then there's also the possibility of oversold conditions,
Okay.
which the RSI is indicating.
The RSI, right? The Relative Strength Index.
Yeah, and that's basically a momentum indicator. And when it gets below a certain level, it suggests the stock might have fallen too far too fast.
So it might be due for a bounce.
It's possible.
So we've got this technical picture with some signs pointing down, but also some hints of potential support and maybe even a reversal.
Right. So now let's tie this back to the fundamentals.
Okay, how does all of this connect to what we saw in the earnings report?
Well, that modest profit increase compared to revenue growth, it really aligns with the stock's decline.
Like the market's reacting to those profitability challenges.
Exactly. And if we zoom out to the broader FMCG sector, there's a lot going on.
Now what?
Well, you've got lower inflation and interest rates, which should be good for consumer demand.
Right. People have more money to spend.
Yeah, but then you've also got intense competition and pressure on input costs.
Which could be squeezing Dabur's margins.
Precisely. So there are both tailwinds and headwinds for the sector overall.
Interesting.
Okay, so we've covered the current market situation, recent financial performance, and the technical outlook. Now let's touch on those potential investment ideas.
Okay, but remember, we're just reporting what the sources say.
Of course, not giving any advice here.
Right.
So one idea is a short-term swing trade.
Oh, like trying to profit from the short-term price movements?
Yeah, so this would involve buying near that 490 to 500 support level.
Okay.
And then selling around the 525 to 530 resistance.
I see.
But of course, you'd want to set a stop loss just in case.
Got to manage that risk.
Exactly. Now, another perspective is a longer-term investment.
Okay, so holding the stock for a while.
Yeah, the idea here is to accumulate shares if the price stays above 450.
Right.
And the thinking is that the FMCG sector tends to be pretty stable, and consumer demand could pick up in the future.
Makes sense.
But, long-term investing requires patience.
For sure.
It's not a get-rich-quick scheme.
Definitely not.
So those are just a couple of different approaches that were mentioned.
Interesting.
But ultimately, it comes down to, individual investors and their own risk tolerance.
Right, and their investment goals.
Exactly. So let's wrap this up with some key takeaways for you.
Sounds good.
So we've seen that De Boer's stock has taken a pretty significant hit lately. Their earnings show they're selling more, which is great. But profits aren't keeping pace, which is a concern.
Right.
Technically, the stock's near some important support levels, which could mean a bounce, but it's also facing resistance.
Okay.
And the FMCG sector as a whole has both positives and negatives to consider.
Yeah, a mixed bag.
Yeah, so you've got this really interesting situation with a lot of moving parts.
It is fascinating, isn't it?
It is. So we've tried to take all the information you sent and boil it down to the most important insights.
You've done a great job of that.
Thanks.
Yeah.
I appreciate that.
Yeah.
So now he's got a much clearer picture of what's happening with De Boer.
I do.
Great. So here's a final thought for you to ponder.
Okay.
Given everything we've talked about, the revenue growth, the profit pressure, the technical indicators, what do you think is going to be the most crucial factor for De Boer's performance moving forward?
That's a great question.
Is it going to be their ability to manage costs effectively?
That could be huge.
Or will it be a big shift in consumer demand?
That's possible too.
Or maybe something else entirely.
Yeah, who knows?
It's definitely something to think about.
It is. Thanks for this.
Of course. Thanks for sending us all this great info.
You're welcome.
And thanks for taking this deep dive with us.
My pleasure.
We hope you found it valuable.
I did.
Awesome.
Thanks again.
Take care.
You too.